What is good? What is good, everybody? Hope you guys are having a great morning. Hope you guys are doing well. And you guys are ready to get active today in the markets. And you're excited about that because I am definitely excited, right? So we're going to pick up where we kind of left off yesterday for the pre-market prep. I'm going to explain to you guys what happened in the actual session, the things that we're looking for, and then what we have and what we're going to expect for today in the markets. We have FOMC today at 2 p.m. Eastern Standard Time. So that is a big volume or a high volume news event that we definitely want to be on the lookout. We're obviously going to trade during our New York session, so this is going to be after our session, but there's going to be some key things that we're going to talk about FOMC that I want you guys to know going into FOMC and even before FOMC, right? So we're actually going to start it off with what we were expecting yesterday. So yesterday we were in a lower time frame bearish move along with a larger time frame bearish move, right? We had a key high get broken. If we take a look here at our daily time frame, we talked about this key high being broken, the fact that price closed as a bearish candle. It was likely that during our session yesterday we seen a steeper bearish move to the downside. Now this right here is just not the best market structure, right? This is a slow and low volume and a sign of a possible rejection, but that doesn't mean we weren't able to capitalize yesterday in the market session just because the volume is slow, right? We were able to capitalize on a solid trade in our session for the VIP, anticipating that continuation of that bearish move to the downside. So how did we actually capitalize on this move, and what was the trade that we took during our VIP session yesterday? And this obviously was something that was broken down to you guys for the pre-market prep. So yesterday we seen price push up. It created this high. We had on the lower time frame within here, we started to see a lower time frame shift, right? So price was creating higher highs and higher lows. We know that the larger time frame, based on what the daily was showing us, was in fact bearish. We just needed to see our lower time frame in fact flip bearish so that we could execute on our possible sell moves, right? So what we seen happen yesterday is price pushed down. We took out these lower time frame lows here, and it was in our session time. It's always important to note that it's in our session time. We've seen a correction, a steeper move to the downside, a correction. This is actually where we went ahead and took our sell move right here during our live session yesterday, with the stops above this high, looking to target a 1 to 2 risk to reward. And as you can see, our take profit was in fact hit. I think I got in like right here, stops above with a target back down into these areas here, right? So our target profit was in fact hit. We've seen right after our target profit was hit, price corrected, and then we had an immense drop to the downside, which was anticipated. Now overall on the 4-hour time frame, we're still in a range bound market, right? We haven't seen a lot of volume for yesterday. You can see we're just kind of in this slowly but surely consolidating lower structure, right? And why is it that we see this? Well, we tend to see this prior to days of high volume news like today, which is FOMC. So this is completely normal of the markets to be slow following an important news event, right? So what does that mean today? That potentially for our session, we could see this slow structure continue, right? Until we see what we get for FOMC. That doesn't mean we're not going to execute and now we're not going to capitalize on the current structure, but there are some things that we need to talk about this move here, because though it may look like price is in a bearish trend, it actually has flipped now from being in a bearish trend to now being in a bullish trend. And I told you guys, or not you guys, but in our weekend our weekend breakdown session, I was telling everybody that I expect gold to be bullish on the larger time frame based on what we've seen from this previous weekly, anticipating a potential weekly bullish flip and to sweep these highs. Now this is a potential move, and what we could see on the larger time frame aligning with our FOMC news is a couple different confluences. So what's the first confluence? Well, price is in an overall bullish market structure, right? That's the first thing that we have to identify, is that we are in a bullish market structure and we took out a key structural high. Now, what is the second potential confirmation that we could be seeing a flip, right? Yesterday, we closed as a bullish daily candle. Despite it having some rejection both at the top and the bottom, it did close as a bullish daily candle at a key level of resistance that we see happening right here. Now, what are we looking now on the smaller time frame? Because in order for something to be actually in a bullish wave, we need to see our lower time frame shift. So if we take a look here, even at the 1 hour time frame, we need to see, did we have a lower time frame shift? Price created a low, created a high, created a new low that broke through the previous low. This becomes the key high. Then we formed a new high. We broke through that low there because we broke through our previous low. This now becomes our key high. And what did we see happen? Price pushed up and just barely broke through this high. That is an indication of a larger time frame market shift, or a smaller time frame market shift. So what does that mean that we're looking for coming into our markets today? That price could likely retest this level here. We already have signs of exhaustion because price is slowly creating lower lows and lower highs. Then we just had our lower time frame shift, and our previous daily candle closed as a bullish daily candle. I hope you guys are getting a picture of understanding how we put all of these different time frames together as to what we can expect coming into the market. So what would I want to see? I want to see if price can go ahead and take a stab at this high here. That would solidify that price is, in fact, for me, and still in this it has in fact flipped from being in a bearish market structure to a bullish market structure to see a corrective structure. And then get this is what I expect: a bullish spike during FOMC. Why? Because our previous daily candle closed bullish, and I'm anticipating a high volume move to fill potentially this current daily wick. Now, am I saying that that is what's going to happen for FOMC? No, we always want to wait to see what the spike of the volume is and what direction it is in when we have the news. We don't want to look to trade, the news itself. Obviously, the news doesn't come out until let's actually pull it up here. We can see it. Pull it up so you guys can all see it. Here we go. So we have it. It should be at 2 p.m. FOMC is generally at 2 p.m. Eastern Standard. We have jobless claims already have been released, nothing crazy, and then boom, at 2 p.m. Eastern Standard Time, we have our FOMC, our Fed interest rate decisions. The last it looks like they kept it the same. And what Powell has been talking about in terms of the inflation rate, right, or the interest rate, is that they want to keep this moderately the same, right? They don't want to look to increase rates too high because of the negative impact it can have on inflation. So what we did during COVID, for those of you who don't know, during COVID, the Fed increased interest rates, right? And they had to increase interest rates, or they cut interest rates, So let me go back over here to the chart real quick. So they had cut interest rates. Why did they cut interest rates? Because spending became less, because pricing of things became more. So in order to get a balance back into our economics, or our economic standing, and just to slow the rise of inflation, they've been gradually increasing their rates, right? Or not to slow the rise of inflation, but to slow the rise of inflation. They've been gradually increasing their rates. Why? And they've been gradually doing it is because if they increase rates too fast, then it can shoot inflation back up. And they want to maintain a balance between unemployment and, the inflation. It's just a tug and pull, right? So they've been stressing on how they don't want to increase rates too fast. This is something that happened in Brazil when during COVID, Brazil increased their rates really high, and then they cut rates, or they increased rates really high, and then they cut them drastically, and this had a huge negative effect on their economy, right? So then they had to end up increasing rates again to help battle it back down. So in order to prevent that same situation to happen, we've been slow to increase rates. You can see the consensus was 4.5, which is what they're expecting, and which was the same as it was last time, right? So what does that mean in terms of the markets? Well, if price, or if the interest rate stays the same, it's likely that we just execute off of what our market structure is, right? So it wouldn't be an unexpected spike. We would likely see volume play, or this structure play out just based off of it structurally, not something that the news enticed, but where we are in the market. So what am I expecting coming into today? or what am I looking for, and key areas to be on the lookout for when you're trading, or whether you're with us in the VIP or you're trading alone by yourself. Keep an eye on this area here, right, at this 34 or 3,418, and also keep an eye out for this low here at 33.38 or 33.89, right? So why are these two areas important? Because this is the key low that started for the push that switched the structure from now being bearish to now being bullish. We have some exhaustion in the markets here, right? So price is showing us that we're slowing down, and we closed yesterday as a bullish candle, and we know our larger time frame structure is in fact bullish. These are all keys that can indicate that price could be bullish. And for those of you in the VIP, you guys know yesterday during our daily recap, as soon as that daily candle closed and I sent you guys, what we could expect for today, this is exactly what I was talking about in terms of, waiting for that potential shift, because though we closed bullish yesterday, we hadn't had the shift until early this morning, right? 1 a.m. this morning is when we finally got our shift. We're seeing a correction, and we could potentially see a bullish move to the upside. If in fact we do see this move to the upside, we'll be looking for our buy moves, looking for a 1 to 2 risk to reward, potentially to target some of our key structural levels here. Let's see, how do I clone this? Beautiful. Up here at 34.42. Now, like I said, keep an eye out for this key low, because this is the low that started for the push of the high. So if this low gets broken, that in fact flips the structure back to being bearish. This would be a false breakout and a liquidity grab, a liquidity sweep, and then we would see, a steeper move to the downside, likely to sweep these lows here at 33.83, right? So these are very, very important things that I want you guys to, keep an eye out for during our session. The VIP members know that we execute after 9:30, and if 9:30 is still unclear, we'll wait for the 4-hour candle to close at 10 a.m. and then we'll look to execute on our next possible move that we see, which is what we did yesterday, right? So that's what we're looking for. And overall, I am a bullish bias for today on gold, anticipating a steeper move up, but definitely will be updating everybody, not just in the VIP but in the free Telegram as well, during FOMC, to see what the spike is, which way the news is going in terms of when we release, and then what we're going to look for going forward. So that'll be sent out for free in the free Telegram if you guys want to join that there. All right, let's go to the next pair. So we're looking at here, we will be taking a look at NASDAQ, right? So yesterday during the NAS, we had a push up the day before, and then we closed as a bearish candle yesterday, right? So what do we see happen? And this is so good right here, right? Because we have an impulsive move. The markets move in two waves, right? And I'm explaining this yesterday. We have impulsive waves, and then we have corrective waves, and then followed by another, generally an impulsive wave. So what do we see happening here? Well, we're in an overall bullish market structure. How do we know that? Because we're creating higher highs and higher lows within this 4-hour time frame, as price is creating a high, low, new high, new low, new high, new low, new high, right? We've been just respecting all of these previous key lows, and price has just been breaking higher and higher, right? So what do we see happen? We had an impulsive move here on the 4-hour time frame, and what we appear to be in is a corrective structure move. How do we know this is a corrective structure move, chat? Well, we know this is a corrective structure move because it is a low and slow volume move following a key high break, right? So that just goes to show that price is in fact still in a bullish overall market structure, but that we're pulling back currently, and that's what we're going to be highlighting here today, is this pullback that we're actually in, right? So let's dial down to the lower time frame here. Let's take a look at what our 1 hour is telling us. So we had a low get created on our 1 hour, low created. This is the wrong tool. Here we go. So we got a low created, we had a high, had a new low, right? Because this was the low that broke through, or this was the low that broke through the previous low. We had a correction, another breakdown. So this becomes now the key high. Then what do we have? A lower time frame shift where price breaks through a key high. We see a correction, then another steeper move up correction back down. So what is this telling me on the lower time frame? The lower time frame is telling me that we are flipping from now being in a bearish trend to possibly being now in a bullish trend, but I want this to align with our 930 open. So some key levels that you're going to be looking out for during the 930 open to keep an eye on for the Nasdaq is this 21 here. So this 21,944 level, and also this 22,066 level. Why? Because this is the key low that started for the break of this high here, right? Because we had a low get created, high, a new low became the key high. We broke through that area, retested, didn't break through the key low, push back up to break through our key high. Absolutely beautiful. Price is rejecting off of this area now. We could still see a steeper move down, and that's why we say keep an eye on this key low here, because if price does break through this low, then we could potentially see a steeper move to the downside, likely to target these lows here at 21,870. But as of right now, I want to see how price reacts within this area here. Overall, let's pull it up. There we go. And then you go from there. If we do in fact see another confirmation high get created, then looking for a scale in play off of a retest, and then a continuation targeting whatever the high is that's created. We likely target some resistance here as well. And then this will be an early indication that we are now going from creating lower lows and lower, or now from that we're going from our corrective structure to now our continuation based impulsive move, right? So these are things that we want to look out for during the 930 open. Keep an eye out for 21,944 and 22,066. So for YM, likewise of the same structure, you can see price created that low here. We created a high, created a new low, broke through that high. Then we pushed up, broke through this high, pushed up, and then see, you can see here on the YM has already flipped back bearish, right? We had a high get created, a new low. Let me draw this out so that this is actually clear. So price pushed down, it created a low. This becomes the key high. Now this was the key low. We corrected, formed a new low. This becomes now the key high. We broke above that high, pushed back down. We broke above this high again. This now becomes the key low. Push back down, broke above this high again. This now becomes the key low. We get an impulsive move that sweeps both of our previous two key lows, a correction, and a likely, rejection off of this area that price could potentially push to the downside. As of right now, this structure is in fact bearish for the YM. And we'll likely see same thing happening over here with ES. You can see we had this high get created, right? That was the key high. Then price broke through these lows. We created a new low, correction, retested that area, formed a new low. What do we see happen? Price pushed up, pushed down, pushed up. Technically, this is my key low here because this didn't break this high. So with the ES here, a little bit different, right? Because price pushed and created this low, created this high, created this low, pushed up, right? And you would think that, oh, price pushed up, this created a low, and then it pushed up. So this should be my key low. And this is what will mess up a lot of traders, because what indicates our key low? Our key low is the lowest point that broke for the high. So you may be saying, oh, well, okay, let me rephrase. So this isn't a new high. So price didn't break this area here, which was my key high. That means that this remains my key low. It pushed back down, then it pushed up. This is still the key low because all of this is just one move to now break for this high. Then what did we see happen? A correction and then another move up. This now becomes the key low, right? Because this was the key high. We've seen a correction and then we've seen that high get broken. This now becomes the key low. And now we have our lower time frame shift where we've taken out this wasn't a key low, but our previous key low here, retested, and then now we could potentially see a bearish move to the downside, likely to target this 6,034 level, and maybe even to test these 6,018 levels if price in fact pushes bearish on our opening session range. So the key levels to look out for this one would be 6,062, because a break of this high would now invalidate that this is in a bearish market structure and we would now be in a bullish market structure. And this low here, because another low break would now verify that price is in fact, in that bearish wave, and we're looking for that move to the downside. So I hope that this all makes sense to you guys. I just wanted to get on here and, break down what it is that we're looking for so that you guys are prepared going into the markets for today's session. And remember, we could expect some low volume during our session up until FOMC at 2 o'clock. That doesn't mean that there's not going to be moves, because as we seen yesterday with gold, even though we were in this low, slow corrective structure to the downside, we were still able to make $1,600 off of a quick 1 to 2 move that took 1 minute. It's not about necessarily how much volume we have. It's about executing based on our strategy. And, that's what we're going to do. So for those of you in the VIP, I will see you guys in about 40 minutes or so. 9:30, we'll start our VIP session. If you are not in the VIP, then you can join the VIP in the link down in the description. You could trade live with us every single day. If not, I will see you guys tomorrow for our pre-market prep. And if you're not in the free Telegram as well, I'll have to link the free Telegram actually in here. Let's see if I can link this real quick for you guys. Manuel, bro, if you're in the live, go to my free Telegram if you can, because I can't. Oh, no, wait. No, I got it. Don't worry about it. I got it. So I'm going to drop this for you guys real quick. Let me go to my channel. Oh, I could just do it this way. Hold on. Give me 1 second. So I'm gonna drop the free Telegram in there. And why I want you guys to join the free Telegram is so that you can stay up to date with what we're going to be looking at for FOMC, because I won't actually be on live for FOMC. So give me 1 second here. I'll drop that in the chat for you guys. Pull this up. And be sure to let me know if you guys want to see any, in particular, any charts that you guys want to look at. If we have extra time here, these sessions will be generally about 30 minutes. So you can see we have 8 minutes of extra time here. You guys could always let me know what it is that, you guys want to take a look at, some charts that you want to dive into, or ask any questions that you have. This is the time to, I don't want you guys to be shy in here. We're building a true community. Ask any questions. No question is a dumb question. And sometimes a question that you may have is something that somebody else may want to know, and they just, might not have the courage to ask up front. So if you have any questions, be sure to let me know. You guys can also contact me through Telegram as well. I'm going to drop this in the chat, so you guys can join the free Telegram there. And like I said, for those of you in our VIP, I will see you guys in the next 30 or so minutes, 35 minutes for our VIP session. We're going to be looking at this gold here, looking at our bullish possible moves. And for those of you who we see tomorrow, I will see you in tomorrow live session. We'll update you guys on what happened today, the moves that we take, same thing that we did today, and what we can expect going into the session tomorrow. So see you guys later.